corporate golf tournament of the season is back. After successful outings in Delhi and Kolkata, action on the greens now shifts to Hyderabad. Join top business tycoons and celebrities as they grab their clubs, forge new relationships and build new networks. Join us for Royal Ranthambore BT Golf on the 18th of November at the Boulder Hills Golf and Country Club in Hyderabad. Presented by Royal Ranthambore Heritage Collection, co-powered by Qatar Airways and Indian Oil. Investment partner Bandhan Mutual Fund. Conglomerate partner Darwin. Driven by MG Morris Garages.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra and this is Market Today. With me is Shail, Bhatnagar, and this is where we will tell you the closing action on the D straight. Markets clearly off the day's low point. We're now at 19,733 as far as the Nifty is concerned. About 31 points lower in trade, but it's a mixed kind of a session after two fantastic trades that we've seen in the previous two sessions. We're looking at a lot of stocks that are buzzing in trade on the Nifty as well. It's the insurance space that's clearly buzzing. SBI Life as the top gainer. You also have Apollo Hospitals, HDFC Life, Grasim, Hero MotoCorp as the other top gainers on this trade today. Apart from this, when we talk about the laggards, however, State Bank of India is the top loser right now. Axis Bank follows, ONGC, Bajaj Finance, BPCL and ICICI Bank, the top laggards at this point in time. In the F&O space, it's the railway space that's now shooting higher. You can see CTC now up almost 5% in trade. Then we also have some autos names like TVS Motors definitely shining brighter, 3% higher in trade in top gear right now. In the sector specifically, it's the healthcare index that's topping the charts today, 1% higher, followed by FMCG, auto, realty spaces as well. What's not really doing well? IT and the financial services right now as well. Shell, clearly two fantastic days of trade, but a pause today. But we are heading into a weekend which is going to be clearly action-packed when it comes to the World Cup. Are we looking at 20,000 coming in after the victory of India, which is short right now?
So Sakshi, let's just separate two parts of your question. Is 20,000 coming?
Yeah.
Most probably yes. When is it coming is a question mark. But I know of dozens of trader friends of mine, a lot of investors who've already moved bag and baggage from Mumbai to Ahmedabad. They've left say at 12 noon Friday, and that's why there are practically no volumes in the market. That's one reason that all interest, whether it's from the trader or the investor community, is now headed towards Ahmedabad. People want to reach early, because you know how ticket prices are, know how hotel prices are. You can look at Indigo stock and see how well it's performing.
Oh yes.
There were colleagues of ours on the business desk who were telling me that the return ticket on Ahmedabad to Delhi on Monday is actually 57,000 rupees.
Wow. So, and I'm sure there is no place to stay.
There's no place to stay, but sensible people booked earlier.
True. That's true.
Let's get back to the market. You've talked about a lot of stocks that are doing well on low volumes. I'll tell you about sectors actually which are in pain. So it's the Nifty PSU Banking Index, which is the top loser, 2.5% higher, 5,061. The Nifty Bank down 1.2%, 43,624 in front of you. Now out of 12, 10 stocks are in the red, and the Nifty Financial Services Index down 1%, 19,555. Out of 20 stocks, 10 are in the red, 10 are in the green. Now the reason here is that late evening yesterday, the RBI, which is the central bank governing the entire banking and the NBFC space, tweaked weights that actually it raised the weights that unsecured loans should be provided for by lenders, which basically means that given the smart growth that we have seen in these unsecured loans, the RBI wants lenders to be very careful about their balance sheets, and therefore has asked them to allocate extra capital to offset any problem should these loans or a small percentage of these loans go bad. Now that has resulted in a very sharp fall intraday, of course, in stocks which had rallied very sharply. So the likes of PNB, the likes of Bank of Baroda, likes of Canara Bank, they have come down. Now the good part here, Sakshi, is that all private sector banks and all public sector banks are adequately capitalized. So this is a knee-jerk reaction that you are seeing in the market on stocks which have risen sharply and they want to book profit. The RBI has given them ample reason to book that, and that's the reason why you see Canara Bank below 400. Yesterday it was 410, 411. So this has to be taken with a pinch of salt. And for stocks like Bajaj Finance, for stocks like PNB, for investors who have a slightly longer term outlook in the market, this may be an opportunity to start nibbling. This is what a lot of analysts have told me when I speak to them.
Absolutely. All right, so let's get our guests on board as well to really find out what should you be doing in this current market setup. Joining in with us is Nilesh Jain, AVP Technical Research, Centrum Broking. At the same time, Abhishek Basu Malik also joins in. He is the founder and chief equity advisor at Intel Sense Capital. Good afternoon to both of you, and thank you so much for taking the time out. Mr. Basu Malik, let me kickstart with you first. What is the sense that you're getting as far as the markets are concerned? We have the World Cup on one hand and we have the elections going on as well. How do you expect the markets to really pan out? Because we were seeing some fantastic trades last 2 days as well. A pause today, but the next week, how does it look like to you?
So next week, sentiment, at least sentiment of the people will depend on whether we win the World Cup. I'm crossing my fingers that we do. And if we do, people will be definitely very happy. Whether that rubs off on the markets or not is a different question. Overall, I think markets, what I've been saying, it's been range bound. I don't see, major change. There are concerns globally. There are concerns in the US, in Europe, India, of course. Like you said, elections coming up, state elections going on, central elections coming up in a few months. So a lot of points where people will maybe be a bit cautious. So even if we take out the all-time highs on the Nifty or on the broader indices, I would still be of the opinion that markets are going to be in a broader range. So let's see. I mean, how it goes. If we do better than that, then that's great.
Right. Let's get Nilesh into this conversation. Welcome, Nilesh bhai, to Market Today, and on Business Today Television. We are actually seeing a sharp fall in volumes on the average at this time of the hour. You see a lot of hectic activity on the long and the short side. All of it is missing because a large percentage of our friends are now headed towards Ahmedabad. First, are we going to meet in Ahmedabad in person? And two, what are the stocks that you are looking at till 3:30?
Very good afternoon to you, Shail. The answer to first question is that I'll be sitting at home and watching on the television. I'll see you on big screen, but I won't be there. So unfortunately, I won't be able to make it. But yes, the second part of the question, I think the markets are getting ready towards 20,000 mark. I won't be surprised if Nifty hits 20,000 mark in the coming week. But looking at the overall setup, yes, looks very strong. Nifty has surpassed its short-term and long-term moving averages. And looking at the overall setup, and specifically in today's session, we have seen a smart recovery in the Nifty index. And it has found support near about 19,600. And we expect this positive move to extend further towards 19,800 on a weekly basis and 20,000 thereafter. So compared to the Bank Nifty still looks strong. Looking at the sectorial participation and sectorial rotation that we are witnessing, I think Nifty should sustain this positive move On the weekly closing basis today, I think it will be a good close, 1% up this week, and for the third consecutive week, we will see the up move that has continued. Bank Nifty, I would rather wait for some sort of confirmation above 43,800, 44,000 levels. Post then I'll be little more comfortable. Now coming back to stocks, so we have buy ideas. First, the sector that is looking strong is pharma. Within pharma space, we are liking Dr. Reddy. This particular counter has given a big breakout from falling channel and looks strong for the upside target of 5,800 on immediate basis and 6,000 thereafter. So at 5,600 is the spot. One can go long in Dr. Reddy, keeping stop loss below 5,500. The another counter that we are liking is MFSL. A good open interest addition can be seen in this particular counter of more than 7%. And technically as well, this particular counter has given a big breakout from a consolidation range that we saw in last couple of weeks. So MFSL looks strong, but the upside need to continue towards 970 and 1000. One can keep a stop loss below 925. So MFSL and Dr. City are the two picks on the wrong side.
Okay, so we have MOFSL and Dr. Reddy's as the top two picks by Nilesh right here. Mr. Basmalik, let me bring you in. Since Mr. Janis also talked about this broking stock, we've been seeing a lot of them really in action over the last few days. Talk about Bombay Stock Exchange, CDSL, Angel One, the kind of stellar performance that we've seen from all of them in trade today. We are also seeing HDFC, AMC move up higher in trade. How are you looking at this entire broking space currently? Any particular favorites from this basket?
No, I think the AMC stocks should do well. It's a very interesting and good business for, I mean, the AMCs. Broking, I'm not very certain because I think we've sort of reached a point where incremental addition of people, of new investors, new traders, is not going to be as high as we've seen in the past. So extrapolating past numbers to the future may be a little bit of a problem. So, but CDSL, etc., could be actually good businesses because we're seeing, more investors getting broad-based, a lot more financialization of savings. So overall, it's a very interesting space. I would, rather be with, things like a CDSL or a AMC. Than pure broking stocks.
Right. And the interesting part is that the entire universe of brokerages or investor and demat-led shares, whether that's the Bombay Stock Exchange, CDSL, Angel One, the advisory services such as CAMS, K-Fintech, some AMCs like HDFC, AMC, all of them are actually showing secular momentum. Nilesh is with us, and of course, he is a part of Centrum Broking, but the parent company Centrum Capital is also rocketed from 20 rupees to 32, 33 rupees. That's the kind of move that we are seeing across the board. While Nilesh, it's a very, very difficult call to take, especially on BSE and CDSL, because stocks have run up very, very sharply. Amongst this whole universe, is there a technical stock which you feel is still to show its strength on the charts?
Well, purely looking at the technical structure, I think all these stocks are slightly overbought. But one stock where we have seen a fresh breakout and the stock is still looking strong, that is MOSL, Motilal Oswal, that is. So this particular counter, purely from technical standpoint, gave a breakout at 1050 and the target is still open at near about 1300. So another 100-point run up can be seen from the current level. One can keep a stop loss below 1170 and can be bought on declines and at current level. Although given the fact that we have seen a sharp
longer term chart of
all the broking stocks in last few trading sessions, so it is better to wait for some decline to get into this particular counter for the upside move towards 1300. And BSE, just want to share my view. Although it is slightly overbought, but I think those who are already holding the long position can continue to ride this particular move. We feel that this momentum may extend further towards 2500 to 2600. One should keep a strict stop loss, I would say trailing stop loss below 2350, and the structure still looks strong.
Right. We'll try and show you a longer term chart of Motilal Oswal Financial Services. Remember, this stock peaked at somewhere like 1585 rupees, somewhere in 218, and because of a lot of profit booking, then slipped down to 585. From then on, it's a one-sided trade, but unlike other brokerages which have hit record highs, especially Angel, there is still some rally left as per Nilesh Bhai, and we need to sort of wait for it to sort of pause a bit and then re-enter at lower levels perhaps. Let's also discuss one space that's red hot on technical charts, and that's the auto space, Nilesh. Where do you see strength or further strength coming in? We have a record high on Bajaj Auto. TVS and Mahindra are on the way to hit fresh record highs. Tata Motors is also at a record high. Where do you find relative value on charts when you look at these 4 or 5 stocks, or any other that you'd like to name?
Right, Salisa. So out of all the names that you have just highlighted, so Mahindra and Mahindra still need to patch up this rally and still trading at corrected level. What I feel is that the stock is forming a good base near about 1450 to 1500 zone. And looking at the recent breakout that we saw at 1550 levels, I think there will be a momentum and stock might move in the range of 1650 to 1700. And I won't be surprised in the November series if we see fresh all-time high coming in from the M&M. So this counter can be bought at current level, keeping stop loss below 1550. That's a breakout level for the upside move to continue towards 1650. And apart from that, we are also liking TVS Motor, although it is slightly overbought, but the structure still looks strong for 1800 plus sort of target. One can keep a stop loss below 1700. And lastly, Tata Motors. This stock, we have seen a lot of underperformance in past few years. And now looking at the fresh breakout, if you look at on the monthly time frame chart, the stock is constantly forming a hat up and Haberton formation. Looks strong for 750 to 770 sort of target on the upside. One can keep a stop loss below 640, and this particular counter can also be added on declines.
Let's get Abhishek also in the conversation. Abhishek, your top choice as far as the auto space is concerned. Two-wheeler space was a big laggard in the previous somewhat, but now they are actually moving to top gear. Your own thoughts here, and any particular favorites that you'd like to bet on?
No, I would, sort of refrain from talking specific, stock names. But I think if you look at, the two-wheeler EV space, there are interesting bets there. If you look at, some of the large passenger vehicles, maybe things like a Maruti, looks interesting. They're doing well. Again, no recommendations or things like that on any of the stocks, but they do look interesting. I mean, the ones that you just showed, TVS Motors, Maruti, and of course the auto ancillary pack. Some of them definitely are looking interesting, looking good.
Fair enough. We'll just take a quick break and see you in just a minute. Thanks a lot for being with us, but do stay tuned. A lot of questions goes on the other way. Which are the top sectors and the stocks that you should be betting on? Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
The corporate golf tournament of the season is back. After successful outings in Delhi and Kolkata, action on the greens now shifts to Hyderabad. Join top business tycoons and celebrities as they grab their clubs, forge new relationships and build new networks. Join us for Royal Ranthambore BT Golf on the 18th of November at the Boulder Hills Golf and Country Club in Hyderabad. Presented by Royal Ranthambore Heritage Collection, co-powered by Qatar Airways and Indian Oil. Investment partner Bandhan Mutual Fund. Conglomerate partner Darwin. Driven by MG Morris Garages.
Hello and welcome. You're watching Market Today on Business Today Television. I'm Sakshi Batra and with me is Shail Bhatnagar. We also have our guest Nilesh Jain from Centrum Broking with us. Nilesh, the other space I wanted to discuss with you is the railways pack. What's really happening here again? After a break, they're shooting through the roof. I mean, like IRCTC is the top gainer today on the F&O space. We have Ircon International as topping the charts as far as Nifty 500 is concerned. And again, IRFC is also 5.5% higher in trade. All of them are moving up. Your own sense and any particular stocks that you would like to highlight now?
Absolutely, Sakshi. So railway stocks are in focus, and one stock specifically from the cash space that has been on my radar since a long time. So Railtail. Railtail is one counter where we saw a breakout from a symmetrical triangle formation, and also we have seen a fresh breakout today at 260 level. I still feel that there will be further upside move we might see in this particular counter towards 285 to 300. But at current level, it is not advisable to chase the momentum. Better wait for some decline towards 265 to 260. That will give a good risk and reward. One can keep a stop loss below 255 and buy this counter for the upside target of 285 to 300. From F&O space, you mentioned about IRCTC. Yes, today again we have seen a good price and volume breakout. And even if you look at OI data, we have seen a lot of short covering in this particular counter. So I think, yes, we might see a further upside move in this particular counter towards 725 to 740. This counter can also be bought at current level and on decline, keeping stop loss below 685.
CTC Sakshi, there are two or other charts that look really good. Of course, RVNL, then IRFC. These are stocks that are again coming back into momentum after a 2-month hiatus. So somewhere in September, when you had seen this rally in the railway stocks peaking, these stocks then slipped into a sideways zone, and now you see very, very strong moves. Apart from the PSU railway pack, it's the wagon makers that are doing superbly well today. Our one-time favorite, which is always on circuits, is Jupiter Wagon.
Yeah.
Same 5% up today.
Yeah.
Titagarh Wagon is doing immensely well on the charts. And you've seen very, very strong moves coming across the space. Actually, Titagarh is now up 13%, 947. You are most likely to see 4 digits here. Then Texrail is up 5%, 143.75. Bearing makers are doing very well. And of course, I mentioned IRFC 5% higher. And of course, RVNL 5.6% higher. Very good volumes also coming in. And the breakout that Nilesh Bhai pointed out was, of course, Railtel 8.5% higher, 9% higher actually now. Let's shift some gears as far as trade is concerned, Nilesh, and focus on the index heavyweights. Stocks like Axis below 1,000 rupees now, given the broader changes in constituent weights is concerned on unsecured loans. What are the zones within Axis Bank which you would consider going in for a buy? This is a very, very strong stock. The most recent high was, I think, 1,045.
Absolutely, there is no doubt about it that this has been one of the best from the index heavyweight banking space. And I would rather wait for some more decline towards the 960 to 955, because that has earlier acted as a crucial support zone. And even if you look at its 200-day exponential moving average, that is placed at 945. So from current level, I feel there will be another round of selling, which will open downside towards 980 to 970. That will give a good value buying from a risk and reward point. One can keep a stop loss below 945. Then it can be bought again for the upside move to continue towards 1020 to 1040.
Okay, all right. Well, Nilesh, on that note, thank you so much for taking the time out and being with us on this special edition and discussing all these special stocks as well. Let's also welcome our other special guest on the show with us. We now have with us Mr. Pratique Oswal, the head of passive funds from Motilal Oswal AMC. Good afternoon, Pratique, and thank you so much for taking the time out. It's great to have you with us on Business Today television. First up, your own quick sense on the markets right now, amidst this macro setup of elections and how cricket is shaping up the markets and the sentiments thereof. What is your own sense of the markets, and are you fully invested right now? Are you keeping some cash off the books? What's your own sense?
Thanks for having me here. I'm always invested, to be honest. I've never really had a chance to keep anything outside stocks and mutual funds. And I continue to do so. I think we've been doing it for many years now. But I think overall, honestly, it's been a great run this year, especially in mid and small caps, as you know. And I think there were a lot of challenges in the start of the year, especially the macro front. Oil prices were, I think, hovering around $100, and now that's also cooled off. Inflation in the US has cooled off. Even the war situation, obviously, it's happening, but we believe that does not have that much of an impact on markets today. And in India, especially if you look at India today, I think the earnings momentum that we've seen over the last few years have been quite strong. We had a 2-year sort of time correction in the markets in 2021, 22, which has sort of had some momentum this year. So overall, I think things have been I would say better than expected, to be honest. And we believe that historically, what we've seen is that the year before elections tends to be very good. So I think at least next year and a half seems to be very good. Hopefully a lot more. And the good thing about the markets today versus maybe a rally that happened in 2018, 2019 is that that happened at the back of high valuations. Today, the valuations today versus the valuations 1 year ago are exactly the same. So I think we're looking at P multiple about 16 or 17. Which is still under, I think around historical average levels or maybe below that. So we believe that this could also, in spite of the sort of run diffuse in the market, it could be a good opportunity for anyone looking at investing even today because of how good earnings have been.
Right. Welcome to Market Today on Business Today television, Prateek ji. It's always a pleasure to host you. And for those investors who joined the market in the last 2 or 3 years, let me just give a very brief background. Prateek runs India's most well-known offshore fund, which is called Motilal Oswal Nasdaq 100 ETF. At the moment, trading at 128 rupees. And if you look at the 12-year CAGR of this particular fund, it has exceeded 20% each year. So it makes it the most, how should I say, beneficial fund if you have a SIP in this particular index ETF. Prateek, let's try and discuss where the Nasdaq is headed. And a lot of good news coming in over the last 1 week or so. Bond yields are down. The dollar index has also slipped off its highs. So the good times are back as far as trades in global techs are concerned. Very strong returns coming in the ETF as well as the Nasdaq. How do you see this space now?
Yeah, so I think overall, as you said, macros are looking good in the US as well. Inflation is trending downwards. The Fed has clearly mentioned that they may not be looking at further sort of rate hikes in the near future. So overall, I think and even long-term interest rates, as you said, have now sort of they tapered off. So I think the one big reason to why we had this crash last year is because of yields going up, and also I think expectations on tech companies were also on the higher side. This year has been the complete opposite. So I was looking at the numbers. If you look at the Nasdaq 100 or even the S&P 500, which is a 500 stock portfolio, all of the gains that we've seen this year, and the Nasdaq is up about 35 odd percent this year itself. All the gains have come from the 7 or 8 sort of large tech companies. So I think, and even in the S&P 500, which is a 500 stock index, if you sort of map the top 7 stocks versus the 493 stocks, you'll see a huge divergence. So we believe that this year has been a huge play on, I think AI, and that has really led to a lot of these tech companies who most people believe are going to make the most of the next revolution, which is going to be AI. Guys like I think Bill Gates are talking about the fact that this can be the biggest innovation or that we've had in the world since when he started Microsoft maybe a few decades ago. So I do believe that we do believe that I think you are looking at a lot of opportunity, and these companies will do exceedingly well when when it comes to these newer technologies. Having said that, I think most of the growth that we've seen from tech companies, but there has not been any movement happening from the rest of the index or the rest of the Nasdaq index. So we believe that I think going forward, there will be sort of some recovery happening in these stocks as well. So we're obviously very optimistic on the international fund space in general. From our perspective, I think more than the return expectations, the whole idea of having international funds in a portfolio is to really promote diversification. If you talk to any investor across the world outside of India, they have about 10, 15, 20% allocation outside their home country. And in these sort of funds like the Nasdaq ETF, you're not only getting these amazing stocks that you use and consume on a daily basis, but you're also buying the dollar, which I think is very precious because the rupee tends to depreciate by 3 to 5 years time. So I think an allocation in an international fund makes a lot of sense in your portfolio. And obviously, we're seeing that there has been a very good recovery in the Nasdaq, and also there is a lot of sort of growth opportunity happening in the underlying stocks as well.
Okay, Pratik, I wanted to understand from you, your conversations with your, friends in the, West, and of course, FIIs have been net sellers here. Looking at the conducive environment getting created with, macros now shaping in favor of the US again, do you think the flows will continue to be on an outward trend even now?
Yeah, honestly, FI flows. So we actually did a very good study that talked about the correlation between Indian markets and FI flows. So FI flows, DI inflows, outflows, and what we realized is that there is not a lot of correlation between these short-term movements. In fact, the good thing about the markets today is that we're not as dependent on FIs as we did maybe 5 or 10 years ago. I think the retail investors, become the most powerful person in India today, which I think is a great trend because they tend to have a savings mindset and they tend to have very regular money coming in the stock market, including pension funds and etc. So, I think yes, money has been. The US markets have had a major rebound this year, and obviously there will be a lot more capital going to US, not from India but also globally. But we don't see much of an impact happening in Indian markets. Also I think what we've seen is that a lot of the growth is happening in mid and small cap, where you don't really see a lot of FII activity out there. It's mostly happening in the large caps, and I think that's where we see maximum traction happening at least this year. So we believe that yes, I think companies will stick to fundamentals, and that is quite strong today.
Right. Pratik, let's try and make a fund portfolio for an investor who wants to get into the market in this fresh Samvat which has started a week ago. As you very rightly mentioned, as far as the Nifty is concerned, there hasn't been any traction in terms of a valuation that has risen very substantially. So that's a good market to put money in at the moment. So 10 lakhs is with you. How would you allocate it over large caps, mid caps and small caps? And of course, we need an international tadka as well. What would you do?
Yeah, so that's a very good question. I would say the first question the retail investor needs to ask himself or herself is, what is their risk profile when it comes to their, I would say, equity returns. I think a lot of investors are better off not having small caps in their portfolio because obviously we've seen a huge trend in small caps, but over the long run, you might have to ask yourself, do you want to have a small cap fund in your portfolio or not? Because they tend to be a lot more volatile. But assuming that our investor base is okay to take some risk, I think the idea is to maybe have a majority of allocation in something like a Nifty 500 sort of an index where you have a, I would say, combination of large, mid, small in your portfolio. So I think maybe I think 50 to 75% of your allocation can be in large caps. The balance can be in sort of mid and small caps. Apart from that, I also would recommend having maybe a 15% or a 20% allocation towards international funds. The reason why I say international is because they offer a lot of diversification to your Indian portfolio. The returns, if you see, of Indian stocks versus US stocks have been exactly the same over the last 20, 25 years. But when Indian stocks do badly, US stocks do well, and vice versa. So I think you're really hedging your Indian sort of portfolio in a very big way by having foreign stocks. The other reason you want to have it is because we all feel that there is diversification benefits, buying large, mid, small. But unfortunately, when markets are down, everything is down. So having some sort of international portfolio is important, and having a major allocation towards large caps. Even though large caps haven't moved as much in the last year, I strongly believe that the largest portion of your portfolio should still be in the large cap space because that tends to be the most stable.
Absolutely. And obviously, safety is paramount. It comes ahead of returns when it comes to a long-term setting of portfolio at a time when markets are already at record highs. This was one part of the conversation, Pratik. We'll take a very, very quick break. And on the other side of the break, we'll discuss the entire brokerage space. Remember, Motilal Oswal Financial Services, which has these ETFs in their own subsidiary, is the largest retail brokerage in India, and its stock is also doing pretty well. But that's just after 20 seconds.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
The corporate golf tournament of the season is back. After successful outings in Delhi and Kolkata, action on the greens now shifts to Hyderabad. Join top business tycoons and celebrities as they grab their clubs, forge new relationships, and build new networks. Join us for Royal Ranthambore BT Golf on the 18th of November at the Boulder Hills Golf and Country Club in Hyderabad. Presented by Royal Ranthambore Heritage Collection, co-powered by Qatar Airways and Indian Oil. Investment partner Bandhan Mutual Fund. Conglomerate partner Darwin. Driven by MG Morris Garages.
Welcome back. You're watching Market Today on Business Today Television. I'm Sakshi, Batra, and with me is Shail, Bhatnagar, and we're speaking to Pratique Oswal, Head of Passive Funds at Motilal Oswal AMC. And as promised, we're now going to be discussing the entire brokerage space, which is red hot right now. Pratik, all these stocks are on an uptrend, and substantial rally has already been seen in many of the stocks like Bombay Stock Exchange. I mean, anybody entering Bombay Stock Exchange at the beginning of this year has already made 300% kind of returns. CDSL about 50-55% returns. Your own stock, Motilal Oswal, is doing very, very well at this point in time. Tell us, what is really happening here? Why are investors taking keen interest in this space right now after a break? And how is this space looking to you over a long-term period now?
Yeah, I think when it comes to the brokerage business, we're obviously seeing, very good volumes. I think we have seen, extremely good volumes over the last 6 to 8 months' time. And I think there was this expectation that, we're in a good run and, volumes will taper off. But I think increasingly, the amount of retail participation that we're seeing today is incredible. I think the number of new investors coming today is also very high. So overall, I think there's a lot of interest in the brokerage space because the volumes are increasing. Even from the exchange side, I think a lot of so if you look at the two sort of exchange businesses, NSE and BSE, I think NSE is the one which is sort of the dominant force in India today. But I think what we've seen over the last, at least what I have seen, over the last 6 to 8 months time is that BSE has made some very good strategic changes into its business model, which has allowed it to sort of really increase its market share in a very meaningful way. So I think overall, and which I think should be a good sort of I think I would say business in general because of how profitable it is. So overall, I think we're seeing increasing volumes. I think we're seeing a lot more customer acquisition in our business, which is why we're seeing I think so much traction in the market today.
Right. The issues obviously are pretty well known in terms of the fundamental rally that we are seeing in brokerage stocks because the kind of monthly addition that you see, CDSL is also ramping up because of the government's directive to ensure that non-listed company shares are also dematerialized. Pratik, staying with this space, something that's dramatically developed is the back-end companies such as KFintech, such as CAMS, such as AMCs such as HDFC, UTI, and so on and so forth. This time it's the entire universe which is on fire. Within this sector, are there any stocks worth looking for the long term?
Yeah, so I think a lot of these companies are we work with them very closely. We are clients of KFintech, CAMS, and also I think the AMC business is also looking pretty good because the sort of flows that we've seen in the mutual fund industry over the last quarter has been very encouraging. I think close to 75-80,000 crores of net flows that we've seen, and I think this keeps increasing every quarter. So I think overall, the AMC business is again a very tricky business because a lot of the flows are dependent on the returns of the funds of the AMC. I think, and I think HDFC AMC is one AMC which is doing extremely well right now. But I can't comment on the AMCs. But what I'm seeing is that overall, I think these companies, the backend companies, are also becoming a lot more prominent. We use them on a daily basis, and it's very hard for us to not sort of use them. I also think the entry barrier for these backend companies are extremely high. It's very hard for anyone to rebuild a KFintech or a CAMS from the ground up because of how integrated they are with the entire sort of ecosystem today. So I think the entry barriers are extremely high for the industry, plus the strong flows that we've seen in the industry from retail investors, not only in brokerage but also in the AMC space, is really sort of led to this industry doing well over the last few months.
Okay. Pratik, you also have a deep understanding of the granular data of AMFI, which provides ETF breakdowns towards the equity diversified side and of course on the fixed income side. What are the 2 or 3 discerning trends that you've seen which have changed over the last 6 months before this rally started, say between April and November? Small caps, yes, they've got the maximum money. But what about other sectors? How about ETFs?
Yeah, so I think one big shift that has happened in the AMC industry, if you look at in March or April of this year, is there were a lot of new tax regulations that were introduced, by SEBI, and some of them were actually unfavorable to certain, I think so. For example, fixed income funds, had a tax, had some sort of favorability in terms of taxation, which has now been removed. Even products like gold ETFs, international ETFs, and also FOFs are not as tax efficient they used to be in the AMC industry. So I think overall, what we've seen over the last 6 months is the number one category in India in terms of flows right now, arbitrage funds. If you look at the last 6 months or maybe 8 months, I think 3 out of 5 of the largest flows into any mutual funds have been the arbitrage category. So I think a lot of sort of fixed income money is coming in arbitrage funds in a very big way because they obviously have a very good taxation. That's one. So that's one big trend that we've seen. The second trend is there's going to be a big rise of multi-asset hybrid funds. This has seen a huge shift over the last 5 years. I think I think balanced advantage funds are also doing extremely well. So I do believe that the entire hybrid category is I think getting a lot of inflows over the last 6 to 8 months time, and because I would say favorable taxation, we believe a lot of the fixed income money will also come into balanced advantage funds or similar hybrid funds. So these are the two sort of big things that have happened in the active management space. In passives, I think in terms of big shift, we are still seeing a huge market share increasing for passive funds. Today, I think passive funds are approximately 7 to 8 lakh crore in assets. About 17 to 18% of the mutual fund industry AUM is in passive funds. So I think, and this has grown from, I would say, less than 5%, 4 to 5 years ago. So there's a lot of interest coming into index funds, ETFs, overall. And I think a lot of this interest is happening in large cap funds where most of the inflows are coming in, and that's been quite stable over time, as we've seen. So I think those are some of the trends that we've seen in the mutual fund industry, as we move on.
All right. On large caps specifically, Pratik, I wanted to ask you, since you also said that, while constructing a portfolio, 70-75% of allocation should be towards large caps. Large caps have largely been underperformance for this previous samvat. But, are they, going to really perform? And I'm going to be asking you in the cricket parlance, the star batsman has really not performed for the Nifty. The private banks, of course, PSU banks have had a good run, but private banks have really not performed. But how do you see the outlook there?
So I agree. I think the Nifty has been relatively quiet over the last year or so. I think what we've seen is that especially in PSU banks, I think there's a combination of many things that have happened. I think there's a lot improved sort of governance structure put in place. NPAs are extremely stable. And also the valuations of PSU banks are also very low. So I think combination of those three have really led to a huge boom in PSU banks. And, we, at least the industry believes that this is sustainable. They've seen a lot better performance and less government sort of interaction or management of PSU banks. So I think that is overall good for the industry. In terms of, I think the reason why I say large caps are important to people's portfolio is because, most people tend to make changes in their portfolio during, at least from an investor's point of view, during sort of negative market conditions. And that's when, large caps really shine. They tend to be the most sustainable way of, investing in equities. And we believe that, I think they're also able to handle volatility a lot better for most investors. So yes, even though we've seen, say, underperformance of large caps, that should not be a reason to investors to not stay away. I think over the long term, we always believe is that you should have a very stable asset allocation. You should not chase performance. If small caps are doing well, then chase small caps. Or when large caps are doing well, then chase large caps. Having a fixed allocation towards each of these things is the best way of really, creating wealth for the long term. Which is why we strongly believe that regardless of what happens in the markets, always have a sort of slightly higher bias towards large caps for most retail investors. Yes, if you are an expert, if you're able to, select the right mutual fund or stock, then you can sort of dabble your hands with mid and small caps. But at least from the average investor point of view, if you look at the US also, even though small and mid caps have done very well in the US, I would say maybe 70-80% of the AUM of all sort of funds need to concentrate on the S&P 500, which is the top 500 companies in the US or large caps. So I think similar trends, we believe that yes, don't get swayed too much by the small and mid cap rally. Have an asset allocation. Most investors should have a dominant allocation towards large caps because that's the right way to invest.
And that's also the most sensible and practical outlook in life. It's the large caps that survive upheavals such as COVID, and they may not perform over a period of 1 year, 1.5 years, or 2 years, sometimes even substantially longer. But once the rally kicks in, it makes up for all the lost ground that that particular stock may have made you experience over the last 10 odd years. Pratik, the other good thing about Motilal Oswal Financial Securities is that it houses the best research team over the last 2.5, 3 decades. When you put a crystal ball mirror in front of you, and look at the 2 or 3 things or themes that might emerge in the Indian capital markets over the next 18 or 24 months, what would those be?
Yeah, I think when it comes to sort of Indian capital markets, I think if you look at themes, I would say that there is a lot of bias towards quality stocks, and I think that will continue to stay strong in markets. I think what we've seen is that companies that are showing high growth tend to do really well in terms of stock performance. So we believe that when it comes to the market, stick to maybe high quality, high growth is what we keep talking to investors about, and that is also what our philosophy of investing is. We obviously have a lot of sub themes and themes when it comes to investing, but we believe that this is a good way of I think capital allocation when it comes to stock market.
Okay. Pratik, I'll ask you on the IPO space as well, which is buzzing. We have about 4 or 5 IPOs lined up for the next week itself. Of course, there are many of them from the new age basket, the e-commerce basket that are now, buzzing again. But also some, renewable energy space, for example, technology, all of these IPOs are coming up. Are you looking at this IPO space favorably? Any top 2 or 3 IPOs that may be on your radar, or maybe you be already invested?
Yeah, so I mean, very hard for me to comment on specific IPOs. Again, names and all, it'd be hard for me to comment on. But overall, I think it's a favorable environment for IPOs. Markets are flush with liquidity, and I think most of the IPOs that we've seen that have been listed over the last 6 months have actually done really well. The SME IPO space is quite buzzing, so I keep getting requests on investors to launch funds based on SME IPOs.
Okay.
So I do think that overall it's a favorable environment. I would say I would recommend investors who are looking at IPOs is to really study the fundamentals of the company that they're buying before investing in these IPOs, because ideally what I've seen in history is that a lot of investors tend to buy these stocks and for listing gains, which is not a bad strategy. It can be a small part of your sort of portfolio. But if you're looking at allocation or allocating big money, I think it makes sense to sort of study the fundamentals before buying these stocks.
Right. And Pratik, sadly our time draws to a close. It's also Friday, also the end of the session, and more importantly, it's going to be a very, very busy weekend. One, what's the plan for Sunday? And 2, what is your research team predicting in terms of what will be the winning percentage or the margin of the Indian cricket team?
I think the winning percentage, based on past performance, I think we can say that let's expect a huge victory on Sunday. So I think that's what all of us hope for, and I'm really excited for the game. So in terms of plan for the weekend, I have a 6-month-old baby at home, so I'm going to be watching it from home. So I'm really looking forward to that.
With that, we'll draw a close on this wonderful session on how to navigate the new Samvat in terms of ETFs and passive funds. Thank you so much, Pratik, for the time. And we look forward to a sterling set of numbers coming in from Motilal Oswal Nasdaq 100 ETF. It's already the top performer, and better days are certainly ahead. Thank you so much.
Thank you.
With that, we'll look at the markets now, Sakshi.
Absolutely. Getting back to the markets then, the Nifty is hovering 19,722, about 42 points lower in trade. And of course, the top laggards remain from the banking space. Axis Bank is lower by 3.5%. SBI is down in trade. Bajaj Finance, the other heavyweight, down 2% odd or so. We have Axis Bank that's down 1.5%. Kotak Mahindra Bank also. Bajaj Finserv also now down in trade. IndusInd Bank. Clearly, the banking space that's not really participating. But, it's the healthcare, FMCG, auto space, realty space still balancing out as well. The railway space clearly in action as of now too. Nykaa from the internet stocks is actually doing very well. It's 10% higher in trade and the top mover on the Nifty 500 basket. So some of these names are actually doing pretty well.
Sakshi, we'll end on a very positive note.
Yeah.
It's Friday, the weekend draws near. as also a very strong performance coming in by the Nifty on a 5-day basis. It's up about 1.7%. The way to end it is look at stocks that are at record highs. So it's the IPO color that's coming into the Tata Group. Tata investment is up 20%, Sakshi, and it's unbelievable volume. 24 lakh 80,000 shares have been traded, 3,908 in front of you, a fresh record high here. Also on fresh record territory is Narayan Hirdalya, 1,217, 6.3% higher. Of course, KPIT, 1533, 3.6% higher. We have the Bombay Stock Exchange, 2427, no surprises here, 4.3% higher. Colgate Palmolive, the smile gets better and better, 2166 for you, 1.7% higher. Tata Consumer at 933.85 is 1.5% higher. And of course, stocks like Brigade Enterprises, News-led, 4% higher, 746. With that, we'll draw to a close. Over to you, Sakshi.
All right, the Nifty ends the day 47 points low at 19,717, and all eyes will now shift on the cricketing action on the pitch in Ahmedabad right there. Many thanks for being with us on this special edition of Markets Today, but do stay tuned on to Business Today television as well for a whole lot more action continues on the other side from the world of business and stock markets for you.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
The corporate golf tournament of the season is back. After successful outings in Delhi and Kolkata, action on the greens now shifts to Hyderabad. Join top business tycoons and celebrities as they grab their clubs, forge new relationships and build new networks. Join us for Royal Ranthambore BT Golf on the 18th of November at the Boulder Hills Golf and Country Club in Hyderabad. Presented by Royal Ranthambore Heritage Collection, co-powered by Qatar Airways and Indian Oil. Investment partner Bandhan Mutual Fund. Conglomerate partner Darwin. Driven by MG Morris Garages.